Hello folks, let's do a quick update on the precious metals markets and see what's going on. We're going to take a look at gold, silver, GDXJ, the US dollar, and the 10-year treasury note. All right, here we go. This is gold in the monthly time frame. We looked at this a week or so ago. This is a continuation pattern. You call this a triangle, sideways trading range, however you want to look at it. It's a continuation pattern. The expectation with a continuation pattern is that once the consolidation is complete, the market will go on and continue in the direction it was headed, which of course is up, and most likely duplicate or replicate the size of the leg that led into the pattern. And so we might expect that much of a move. We can throw that on the chart real quick. If we just draw a trend line like that, and then if we place it, let's say price was to break out at that level at the top of the continuation pattern, that might take us up to where we call it 2650. 2650 up here at the upper median line of this shift pitchfork. And so we might look at something like that as a price target based on this monthly chart. And of course, we got a lot of work to get there. We do have analysts, Goldman Sachs, Barron's, they're predicting $2,500 to $3,000 by the end of this year. We'll see if we get there or not. So energy is a little bit above mid-range, so we do still have energy if price wants to head higher from here. MACD is in bull mode, suggesting that primary trend is upwards. Let's drop down to the weekly time frame, and we can see we've got this nice bottoming candle. We can call this bottoming candle because of the relatively long lower wick or tail. And then we've got a solid body, that's upward price movement, and then a close very near the top of the bar. And so that's another bullish factor. That bar pushed through the 40-week moving average. And now this current week, we've started price opened above the 40-week moving average and has made steady progress higher. Bull mode still in MACD, energy low in the weekly time frame. In the daily, so we got some nice action for the last several sessions. We've got gold now pushing into this resistance level at 1868, and we can see resistance, a little bit of a test on support, test of support with overthrow to the bottom, and then a failure of support, and now we're testing it from below. MACD is on a buy signal, so we got a fresh buy signal at the end of last week, steady progress higher. Of course, MACD is very oversold, so gold in this movement became very oversold, so we're starting at that low level. Lots of room for movement higher in MACD. If you're into Andrew's pitchfork, one of the things we can see in this particular chart, we have two forks. We have a downward sloping shift pitchfork. This is in red. And then we have an upward sloping, this blue shift pitchfork. And Dr. Timothy Morge, that's where I learned Andrew's pitchforks, he talked about the intersection of two forks as being a price magnet, because quite often price will be drawn into these intersections and move in and out of these areas impulsively with high energy. And so that's what we see in here is that we got a price spike down, it tapped that price magnet and then bounded higher. So there's gold in the daily. Silver, this is our weekly time frame. Price is moving back up into this support resistance zone. And I call this a zone because, we've had a lot of price action in this area and we're back in there now. MACD, we're on a sell signal and in bear mode, suggesting that primary trend is down in this time frame. Energy is very low at this point. Silver in the daily time frame, got price working on overhead resistance, and there are multiple levels of resistance. We've got two median lines and then this support resistance zone to work on. New buy signal, so positive indication in the daily time frame of silver. We've got a new buy signal. MACD is fairly oversold. Yeah, very oversold. See, we have to go back all the way to late 2021 when MACD was at this level of oversoldness. And so this is a very oversold level, which gives price room to move higher if it wants to. Looks like we're getting some support from the 20-day moving average, 50-day moving average still above the 200-day moving average. So silver, silver's got a lot of work to do. In the mining stocks, this is GDXJ, that's my proxy for the mining stocks. In the monthly time frame, don't really have a good fork to look at, but we definitely have a price channel happening. Obviously, it's a downward sloping channel. We've had price testing the upper bound of that channel several times. We got some overthrow action in the past 2 months. In the current month that we're working on, so far, this is a bullish candle. You could call it a doji, perhaps. Long lower tail pushing up into resistance at the top of that channel. So that's looking good. And again, that long lower tail is positive on that candle. MACD is in bull mode, suggesting that mining stocks are in an uptrend in the monthly time frame. Energy is low. In the weekly, we've got some nice action going on, and what I'm referring to is a little bit of a gap between this close last week and the open this week. We got a gap open on Monday, and price has risen back above the lower median line of this modified shift pitchfork. We should be getting support from that median line. Of course, we're just above this support resistance zone. MACD is on a sell signal, almost in bear mode, not quite. Energy is low. In the daily time frame, we've had several sessions now of progress higher. Currently, we're working on or pushing into resistance, potentially a little bit of resistance from this, you call this the bottom of this gap. So we've got a gap in here. Let me highlight that area. So we've got a gap in here, and we can see price pushing up into that gap. And one of the things we look at it in technical analysis, or one of the sayings, is that price abhors a vacuum, which means price does not like open gaps in charts. Open gaps tend to get closed. And so it wouldn't be surprising to see this gap closed fairly quickly, perhaps in a single trading session if we get some positive action. And of course, we've got a lot of overhead resistance. Once we do get through that gap, we're going to be pushing into, this is the 200-day moving average and the support resistance zone. New buy signal, albeit MACD down in bear mode, suggesting that the primary trend remains downwards for now in the daily time frame. When we're looking at the precious metals, we've got two markets that can act as significant headwinds, one being the US dollar and the other being interest rates. When they are strong, the metals tend to be weak in response. So what we're seeing now is a pullback in the dollar. We got this big movement, actually, for the last couple of months. We've been getting this strong upward action in the US dollar. We've got this double top, of course, got an overthrow from the double top. Now we've rolled over. MACD was also at an extremely overbought level, potentially rolling over in MACD. energy still very elevated in the US dollar. So we may only get a high consolidation, so we might see some sideways action for a little while. Definitely time for a correction. The dollar needs to take a rest. It's done a lot of work pushing higher. Doesn't have to take a rest, but certainly would be appropriate to see some kind of correction, consolidation. If we look at this impulsive price movement, and take your pick where you want to say that movement started, I'm picking this level. A 38% Fibonacci retracement of that impulsive movement takes us back to, 1.275, which is just a little bit lower than the 10-week moving average. So potential support level there at the 10-week moving average and the 38% Fibonacci retracement. Just because this chart gives a good example of impulsive price action, let's take a closer look at that. And so we've got a doji candle. Dojis are always indicative of high energy. I like to think of them as a battle between buyers and sellers. And so when I see a doji candlestick, I know that buyers and sellers were duking it out in the markets, and neither one of them was willing or able to push price in a particular direction. The bulls couldn't push it higher and the bears couldn't push it lower, and so we get this flat bar on the body of that candle. Another doji there with a long lower tail. All of these bars have lower tails. We could describe these as wide-ranging bars, price closing near the top of the move. So several strong or high energy candlesticks in there, which contribute to me calling this a impulsive movement, this entire move impulsive. Basic definition of an impulsive move is price moving a great distance or a unusually large distance in a short period of time. And so I'm going to call that an impulsive move. Oh, and the reason that impulsive moves matter, one of the reasons they matter, is that when we apply the Fibonacci techniques in particular, they are most accurate when we apply them to impulsive movements. We can throw a Fibonacci retracement or a Fibonacci extension tool on any price movement we pick, but it's not reasonable to expect just any random Fibonacci tool to give us an accurate result unless we're working on an impulsive price movement. This is the US dollar in the daily time frame, and again, we reached this level of overboughtness and then rolled over, potentially at support down at this is the second median line extension of this Andrews pitchfork, potential support level. This is the 38% Fibonacci retracement that we just looked at. We can see here in the daily time frame, that's coincident with the 50-day moving average. So the dollar's got at least two levels of support, just a little bit lower. MACD in bull mode still, but rolling over from this very overbought level, and we can see how overbought that is. All the way back, this is the big scary plunge in March of 2020. Well, the recovery out of it, and MACD reached all the way up to this level. And here we are again at this level, and price is rolling over just like it did back in 2020. So that's the dollar. Obviously, having the dollar pulling back like this has helped the precious metals move higher in the last few sessions. Let's look at the other potential headwind for the precious metals, and that's the bonds, the bond market. This is the yield on the 10-year Treasury note. And we can see again, we reached, this is the first median line extension of this Andrews pitchfork. Got a little bit of an overthrow to the top, pulled back now. We're at the upper median line of the fork, and the 40-week, or excuse me, that's the 10-week moving average. So two layers of potential support, although, it looks like price has already dropped below, actually it has, price has dropped below that median line, upper median line of the Andrews Fork. MACD rolling over in bull mode, stochastics rolling over, but still very elevated energy. In the daily time frame, this we can see is clearer on this Andrews pitchfork that price has broken below this support level. So that upper median line was a potential support level. It did not hold. We're now below it. In Andrews pitchforks, whenever price moves through a median line, the next target becomes the next median line of the fork. And so in this case, let's show that. And so we might look for our next level of support along this. This is the median line of the fork. It's a little bit below the 50-day moving average. And so we just have to see if we get there. MACD in bull mode, but on a sell signal. All right, folks, that's all I got for you tonight. We'll see what the metals do overnight. If there's any big movements in the markets, I'll do an update in the morning. Have a great day.